Good evening. Welcome to Equity Access News, your home for all your financial insights and real-time stock quotes. I'm Sandra Chororo. Let's get to business. RBZ has issued another 92-day Treasury bill to finance government programs. The amount on offer is $100 million and the bidding is open from today to tomorrow. Applications must be for a minimum amount of $1 million. In a bid to meet the demands and expectations of its customers, Cassava Smartech has added new features on the Explore section of the Sasai app. Let's have a look at some of the new features that are included in the app.
But like we said at the point of launch, that Sasai is an all-in-one app. We would want to make sure that our customers actually get rid of the app fatigue. You'll be able to see the icons for Facebook, Instagram, Twitter, YouTube, and a lot of other developments on there. Sasai also is going to enable corporates to do advertising. So you're going to see some banner ads which will be appearing on Sasai under the Explore section. There will be gaming, there will be music, and a lot of other developments on there. So I encourage all of you to make sure that you download the app if you have not. If you have downloaded the app, make sure that you update the app because the next release will enable you to see those features. One of the developments we can do is we already have got some of the apps which we have in the group. You will start to see them again under Explore, your Mix, Bid Buddy, and you also see the EcoCash app, which eventually all the EcoCash transactions will be appearing under the app, and at an appropriate time we may discontinue the EcoCash app because all the functionalities will be available on Sasai.
In a marketing bid, the company is rewarding lucky customers with a range of lucrative prizes under the slogan Chaka Chaya pa Sasai. Chaka Chaya pa Sasai launches today at midnight. Let's take a look at the prizes to be won in the competition.
Next. So we're launching today Chaka Chaya pa Sasai $10 million promotion, which we are starting this afternoon, and you're part of the winners should you be active on Sasai. So this promotion is going to be having 3 grand prizes, which is 3 houses. So we're creating 3 landlords with title deeds for a house worth 70,000 USD. You can do the conversion when you file your story at the appropriate exchange rate. So in addition to that, like I mentioned earlier on, that we're continuing with the Sasai Remit promotion. Anyone who sends 0-rated transactions will be remittances into Zimbabwe terminating on our platform through the South African corridor and the UK corridor. They also stand a chance to win 2 houses. And these 2 houses are specifically for the remittance product, and this is specifically for people in the diaspora who will be sending money via Sasai. So there's those 2 houses. So in total, Sasai is coming with 5 houses as the grand draw. So the promotion starts today. In addition to the houses, there's devices to be won, there's handsets, there's tablets, and more importantly, there's data, free data which we're going to avail through Sasai. Why I've got my colleague here, Deep from the MNO site, Econet Wireless Zimbabwe, we're launching a Sasai bundle. At the point at which you download the Sasai bundle, you are going to get $20 worth of data for free. In addition to that, every week we're going to have 10,000 winners, and those 10,000 winners will be getting $100 worth of Sasai data valid for 1 week. Next.
Okay. NTS reported a 48% decline on revenue due to depressed demand in the country. According to a trading update given this afternoon at an AGM, the firm is also looking to open 2 new branches despite the worsening economic conditions in the country. Our team was on the ground at the AGM. Let's have a look as they talk to the CEO.
Hello viewers, we are by the sidelines of National Tire Services annual general meeting, and there's just been a presentation of their trading update, and with me to discuss that is the MD, Mr. Benson Samudzimose. Good afternoon, and thank you for joining us.
Good afternoon to you. How are you?
Beautiful. Now let's talk about your performance. As according to the trading update, your sales volumes are down 48%. Just in a nutshell, you want to explain what has been the major contributor where that is concerned?
Okay, the biggest challenge has obviously been the access to foreign currency to bring in and to import the tires. We have had limited success on the interbank market, and we've had to endure third-party supplies from other distributors, and that has affected volume. The demand is there, although it's been subdued given the challenges in the country, especially to do with fuel. The shortage of fuel and the pricing of fuel means less mileage. Less mileage means less demand on tires. Again, disposable income has affected a few families to an extent that compromises are being taken in as far as the safety of motor vehicles and tire wear is concerned.
I realize, and yet you remain optimistic. You spoke that you want to open 2 branches. What is the rationale behind that?
Yes, we are optimistic because in the tire retail business, location is one of the key success factors. So we've identified and secured attractive locations that we believe will make money. Not a lot of it at the moment. There are no branches that we are opening that are going to be loss-making. They'll at least break even. And when things get better, as we believe they will, those left standing will continue to enjoy the benefits of having stayed in business.
I realize, and then you did make mention of a properties business. Would you want to shed more light where that is concerned?
Not quite a properties business. What we intend to do is to separate. NTS has got a good property portfolio. We want to separate the business from the properties section and then leverage on the property to grow the business.
I realize. Well, thank you so much, and good luck with the ensuing financial season.
Thank you very much.
Much appreciated.
Cheers.
Harare would temporarily resume pumping water at its main waterworks on Tuesday after months without any water to some residents. Most of Harare's water and sewer infrastructure is in a state of disrepair, leaving the city unable to supply some of its more than 2 million residents. Harare City Council Acting Mayor Enoch Mupa Wamonde has told reporters on Monday that authorities had shut the Moton Jaffrey waterway, citing shortages of foreign currency to import treatment chemicals. On Tuesday, he said chemicals had been secured that would last a week. Mupa Mawonde said residents will start receiving water on Tuesday just before midnight. Securities and Exchange Commission of Zimbabwe has launched a booklet on anti-money laundering and the combating of terrorism. The booklet will be used by capital market players as part of efforts to protect the integrity of security markets. The RBZ Deputy Governor Dr. Kupikile Mlambo has said that the psychology of the dollar is hindering the move by the government to abandon the multi-currencies in the country. The multi-currency system, which was in place since 2009, was scrapped with effect from the 24th of June 2019 in a desperate move to stabilize inflation and exchange rate. Despite these efforts, most businesses have continued to price their goods and services in US dollars, while prices in Zimbabwean dollars have remained a direct conversion of the US dollar depending on the rate of the day, largely anchored on the parallel market. Resultantly, the economy is battling price distortions stemming from the multi-tier pricing model, which is most expensive in RTGS dollars or electronic payments. It was expected that the scrapping of the multi-currency regime should boost the value of the local currency, subject to high demand for the purposes of transactions. However, the Zimbabwean dollar continues to lose value, reaching a high of $1:23 against the US dollar in the previous week. RBZ has issued a further directive to local banks to freeze accounts of 5 more companies in line with the recent probe into allegations of money laundering believed by some sources as related to the parallel markets dealings. The Financial Intelligence Unit directed all banks to close accounts belonging to Bill Hyde Investments Private Limited, Landela Investments, Remosa Trading Private Limited, Fossil Agro Private Limited, and Travis Travel. Last week, the Financial Intelligence Unit also directed banks to freeze accounts of 4 large companies that include fuel dealer Sakunda Holdings, car dealership Croco Motors, money market company Access Finance, and Spartan Security. Thank you for watching. This concludes our evening news. Join us next as we're joined by our economist for the news review.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work.
Welcome back, viewers. It's now time for news review, and with me is Respect Gwenze, who's the chief analyst here at Equity Access. I'm Iban Mabonda. Now, Respect, good evening and welcome to the show.
Thank you. Always my pleasure.
Beautiful. A statement issued there by the Reserve Bank Governor, Deputy Reserve Bank Governor Dr. Kipukile Mlambo said that the psychology of the dollar is hindering the move by government to abandon the use of the multi-currencies. I mean, history has it that countries that have dollarized have found it difficult to undo the dollarization, and it seems like Zimbabwe could be facing a situation of such kind of nature. Is that what we're facing? Is that what Dr. Kipukile is?
I don't think it's just fair enough for us to just blame it on the psychology. I mean, in terms of what people think or envisage the US dollar to be. Of course, it's a store of value, and it's quite a strong currency. But I think Zimbabweans are more astute. So when they tried, they've been beaten once. I think 2008 memories are still quite fresh. But equally, I don't think that we do have got the right fundamentals in place at the very this specific time. I think that despite the fact that currencies thrive on confidence, if you've got your fundamentals right, it doesn't take time. It won't take time for it to reflect in terms of the absolute levels of the exchange in the market. So I think, how do you explain a situation where a country has earned $2.58 billion over the first 6 months of the year, and in the same vein, we have seen 800 million being dispensed on the interbank market, which I think reduces to about $4.6 million a day, compared to receipts in the first 6 months alone of about 14.5 million. I think that variance between what we are getting on the market and what we are getting as forex as forex generated from exports, there's quite a huge variance between those two aggregates. That has not been explained. Of course, when you're looking at our import bill, we demand upwards of $10 million a single day in order for us to satisfy our imports. I think when you then look at the variance between what you're going to demand and what you have in terms of suiting that demand, then the gap is still wide. So obviously that speaks to fundamentals. That speaks to the current account shortfalls. That speaks to a BOP imbalance. I think that side of the equation is not okay. And when you look at the money supply side, there's been a growth from 10 billion to about 15 billion. Of course, much of the growth from 10 to 15 has been driven by the conversion of nostrils into, because by the RBZ, when they compute their figures, they're supposed to change the nostril balances into local money terms at the prevailing exchange rate. And the exchange rate, the more it moves upwards, the more the nostril balances in RTGS terms also goes up. But I don't think that it's just fair to leave that figure unattended to. We are sitting at 15 billion. When you are holding on to a dollar in USD, when the exchange rate worsens from 8 to 16, it means you now hold 16 bond notes or 16 RTGS dollars. You now have got more spend. In other words, the growth in exchange rate is actually inflationary. It's not fair to just leave out that balance and say because it's coming out of a conversion, then it means it's not inflationary. Of course, it's not high-powered money. It's a conversion of a currency, but it's truly inflationary, because for those who are holding the US dollar, they now have got a higher spend. They can now buy more. Of course, there's a compensatory impact on those balances that are, on those economic urges that are not getting the US dollar. But I believe that that movement is a reflection of inflation, and it feeds into the broader narrative around the exchange rate. So to really argue that this is purely a matter of psychology is not fair enough. I think we have to zoom deeper to really interrogate our fundamentals. We really have to see, we really have to look at whether these fundamentals are in position. I think when you look at the people who are driving the exchange rate today, these are people who have got proximity to government. These are people who are right at the core of governance in this country. And for these elite few to be doing what they're doing, it means they've also lost confidence. They've equally lost confidence. They really know that whatever maneuvers that are being done do have got an inflationary impact. They do have got an impact on the exchange rate. And they can't take risks. They can't take bets. That's why they are pushing their money through the way that they're doing via the informal market. So it's really a pure game of fundamentals and the lack of fundamentals thereof.
But also we've seen calls coming in from the opposition. The other day we're speaking with the MDC Vice President, who's also the former Finance Minister of Zimbabwe, Honorable Tendai, who said, look, this launch of the Zim dollar was pretty much premature. Maybe we need to eliminate the Zim dollar, bring back the multi-currency regime, and perhaps move toward bring back introducing the rand as our legal tender. But let's ignore the rand aspect of things. Was the move to bring back the Zim dollar premature? Are we on the right track where that is concerned?
I think the events of the past 8 days are quite clear. We are not on the right path. Why are we not on the right path? I think if you try to look at the movements, especially on the parallel market, coming from around 23, 24, thereabout, down back to about 14, and now we're back at 21. I think this is a clear reflection of the fate of this local currency. Government is rather focusing on the demand side by trying to thwart accounts that are believed to be fueling the exchange rate on the parallel market. In other words, they are focusing on demand. They are not interrogating the supply side of the equation. Like I said, where is the difference going to? We have got 14 million that's being generated on a single day by Zimbabweans, either exporting or remitting money back home. But we have got only 4 million that's moving on the interbank on a single day. What's accounting for that variance? That's where we try to get solutions. I believe that we are on the wrong path. The similar way that we are wrong about austerity. Austerity is a demand-focused tool. It's meant to thwart demand and reduce levels of aggregate demand in the economy. It does not address the supply side. It does not address production. Once you increase production, you also try to match your demand side. So I think we are purely wrong in terms of how we are evaluating the situation. Why? Because we are focusing on the demand side. Because we know the supply side is untouchable. It's something that they have felt. It's something that is definitely amiss. Address the fundamentals. Address the bottlenecks that are there. Address all those shenanigans that are going on in terms of how forex is being allocated. And then we start a new page for the country. But in as much as they can do that, then the only alternative that we have is to go back to the USD regime.
I'm still on the same subject. RBZ has issued 92-day Treasury Bills. On offer is 100 million and bidding is open between today and tomorrow. How important is this particular development, and what is the intended mission, or what is government?
I think it's quite clear. The budget anticipates that we're supposed to have about 3.5 billion in terms of a deficit. We are expecting to spend about 18 billion this year, from about just about 12 billion in terms of the receipts that are expected from ZIMRA collections. And after a bit of other funding that we get from ELZO, concessionary funding, then it might leave us with a gap of about 3.5 according to government. My own forecast is that we could even blow up as much as 6 billion in terms of the deficit. So that deficit needs to be funded, and it can only be funded through some activities that is government playing out in the open market. And this means issuing treasury bills. In the budget, in the midterm budget, the Minister of Finance has promised that they will not finance the budget in inflationary, the budget in inflationary ways. But this is exactly what they're going to do. Why? Because we do not have multilateral support funding. We do not even have some other multilateral as well, bilateral funding as well with other countries. We have gone right around the world. No one is willing to give us money. So we are on our own. So as in the past five years, we have only funded our budget deficit through issuance of treasury bills. And treasury bills went from about 400 million to about 7.6 billion as at August 2018. This is the same method that we are now still adopting. But when you're looking at the size of this bill, the issuance, the recent issuance, it follows the previous 30 million and the other 6 million. This is the largest since Mtuli came to office, and it brings about 100 and the total now to about 190 thereabout in the past 3 months alone, 190 million. It's still low. I believe it's still low. It's still manageable. But obviously, when it grows beyond certain levels, I want to believe that if you're funding 3.5 billion in terms of treasury bills, that's purely inflationary. I anticipate that such funding can actually blow up money supply by above 30%.
Interesting. Today we're just going to bundle things up and perhaps move on to the stock market. According to how it played out today, the all share index is up 3.34% to 242.92%, 92 points. The industrials index is also up 3.28%. Mining's up 6.34%. The mining's index is usually on a constant level. The ZSE top 10 was up 2.75% to 233.12 points. An interesting trend on a week-to-date basis. All share index is up 23.71%, while on a month-to-date basis, the ZSE all share index is also up 46.02%. Just in a natural respect, what do these figures tell us? I mean,
I think it's quite clear. The whole market is green. It has turned green since last week. It's been a long time coming. I don't know why in the first place we had to incur 5 weeks of losses before the past 2 weeks gains. I think that was very. I think investors lost it in that bet. But I mean, markets are always volatile. You have to move up to actually come down, and some also buy on that dip. They profiteer from it, and the market retraces upwards. But the fundamentals of this country are very weak. They're very weak. I mean, there's no doubt about that. So obviously, it actually brings one thing or one side to the stock market. The stock market has to go up. A simple matrix there. I was talking to colleagues today, and they were quite worried about their share price. And they said, so if a certain company has got a share price of 100 cents, and the country's currency moves or changes from a USD to that other currency, and that other currency weakens by say 10 times, does that mean my share price should remain at 100 cents? Because it was 100 cents in US. Is it still 100 cents in Zim dollar? Should it not move in line with the exchange rate? I said, of course it should. But I mean, the markets always move not at so much a faster pace than what you would anticipate. So obviously the repricing is definitely supposed to come in. But outside of that, in a market which is quite volatile, high inflation, the exchange rate is tumbling, you definitely need to see a movement towards hedge-seeking assets just like stocks. So I mean, investors should actually be pumping their money into stocks, some of them blue chips, to preserve value in this volatile moment, as well as to take advantage of the cheapness of most of the stocks that are on the ZSC market. But I think broadly, what we are seeing in terms of this current movement in prices, it shows a market that is jittery, a market that is anxious about what is happening elsewhere, especially on the forex market.
Okay. Top 10 stocks, it's all green except for Delta as well as cassava. But really, let's talk a little bit about cassava. I know that today you did attend the launch of the extension of the service offering of Sasai. They've added in several features that would make the user experience a little bit more composite. Of course, as I said, that their share price dropped 1.38% to settle at 200 cents. But let's talk about the initiatives that are being brought onto the scenes by Cassava. The very own, the very WhatsApp as well as the widget. What do you think could be the prospects of this particular product?
I think it's a very ambitious project. On the outset, the Cassava has actually launched a $10 million promotion today. I think if you're willing to push in that much as a way of promotion, I think it really shows the company's commitment, its long-term commitment, and I think it really shows how aggressive the company is and how much they're so much willing to see that product succeed. But I think if you're looking at the technical side, this is a service which integrates your ability to communicate, through chatting. It also puts together within that same sphere your ability to pay, and in fact, this is the most nuanced side of the application. So it's a 3-in-1 kind of application. But my thinking straight away is, how do you ensure that you compete with unitary components? Suppose it's in payments. Are we saying that this is the best service in terms of payments? Is it going to provide the best service in terms of payments in Zimbabwe? Is it going to provide the best in terms of chatting services? Because as an integrated platform, of course there is value in convenience. Why? Because you're doing everything that you're doing in a single on a single platform. That means it really enhances convenience to the client, which is what innovation is all about, and it's something that I'm excited about. But I think the next step is to look at how you push a person out of their conventional chatting system. It will take years to build a platform that can compete with WhatsApp. Why? Because in the formative years, you can't even if you get onto the application, there is still a need for more of your contacts to come on board as well. If you see how WhatsApp and Facebook, the way they are modeled, you actually sometimes have to invite friends and so forth and so forth. So I think it's gonna take time. I think it takes at least 10 years to build a platform that we could really say could compete on a global scale. So I think Econet might be up for it, but they really have to leverage more on their payment side. They really have to keep on pushing, especially in terms of enhancing their payment side. I think that's how Cassava is going to come out a better player. But there's so much competition out there. There's some other African giants who are also looking at that space. They are obviously investing and innovating to find ways of how to do that. But I think Econet has a chance Cassava has a chance to compete in that space and to come out of it with at least a favorable market share.
Yeah, but it's gonna take quite a lot, if at all, there to pull this thing off. Because I don't mean to be the optimist, to be the pessimist here, but look at how WhatsApp has been established as a global giant in that space. And if I'm to say, for example, interact with my colleague who's in the US or who's in Canada with my relative, it would, it may not be as easy to convince them to move off their platforms, moving right onto this one. Then also to talk about the competition, MTN was a bigger player on the continent as well as beyond. They are also launching their own version of WeChat to play in the very same space. And I was also checking Airtel. They were also in some capital raise for some project that, which at the time that I was looking at it, they've not yet specified the reason for which they were putting together the resources for. But it could also be possible that they are also eyeing the very same space. On the payment side, I know that in South Africa they also launched a product called Time Bank. Why I'm making reference to some of these international players is because Zimbabwe is pretty much a small country, just a population of 30 billion people. So if they are looking to expand beyond Zimbabwe, they need to factor in all these issues.
And I think scale is most important, because if you're looking at MTN, their strength really in some of those, they've quite an expansive base. They've got presence in more in more countries than Econet. So obviously it speeds up their rate of growth. It speeds up their penetration into this market. So when you look at a market like Nigeria, for example, the populace there, I mean, when you're looking at the numbers, quite a huge populace. And what it means is that players in those markets, or players who have got existing base in that market, can easily steamroll the growth, I mean, in terms of introduction of such service ahead of players who are still not yet known. Of course, Econet has made movements into the region and even globally, but I think there's some players who have been dominant in those space, and obviously it will give Econet a good run of their money. They really need to pull up the strings to really compete in the global space.
Well, interesting. Let's see how that actually develops. Well, viewers, this concludes our evening news as well as Markets Daily. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. From the Equity Access team and I, Danke and ciao!